The crypto market is known for its volatility, and with the recent increase in prices, many are wondering if we are on the brink of a bull market or if it's a bull trap. But with so much speculation and hype, it can be hard to determine if the upward trend is on account of fundamentally positive market signals or false positives, fueled by manipulation and overconfidence. But before we can jump into the video today, we must first include a disclaimer that all opinions and views presented in this video are not to be perceived in any form or fashion as financial advice. This video is purely educational and for entertainment purposes. It is designed to help new and old crypto enthusiasts alike in their journey towards being able to do their own research in this ever-changing crypto landscape. So with that out of the way, back to the question. Is the next bull market in cryptocurrency imminent, or is it all just a trap? Now, a bull market, for those who may not be familiar, is a period of time in which the prices of assets, in this case cryptocurrencies, are on a sustained upward trend, typically for positive fundamental reasons. A bull trap, on the other hand, is when we see a period of upward price movements that mimic a bull market, but without there being any underlying fundamentals to support it. This results in investors confidently jumping into a market at potentially inflated asset prices, and then suffering the consequences when prices fall back to their true value. And it's not just traders and investors who are wondering about this. The question of whether or not we're on the brink of a new bull market has left experts and analysts as well looking to the traditionally reliable factors for answers. So what are some of the factors that are commonly looked to as signals for a new bull market? One major factor is the increasing involvement of institutional investors and mainstream companies in the cryptocurrency space. We're seeing more and more traditional financial institutions, such as banks and hedge funds, getting involved in cryptocurrency trading and investing. This is a significant shift from just a few years ago, when the majority of the market was made up of individual investors. News regarding big financial players' moves in the space always has to be taken with a grain of salt, however, as we saw recently with a short-lived announcement by CZ from Binance that it would assist FTX in their liquidity crunch. Ultimately, this assistance did not come to fruition, but not until many wealthy individuals and entities were able to offload their holdings before the markets tanked. Another factor is the growing acceptance and legitimization of cryptocurrency by governments and regulators around the world. We're seeing rising numbers of governments taking steps to regulate the use of cryptocurrency, which is helping to increase mainstream adoption and build trust in the market. Beyond just regulatory oversight occurring is the research and development being put into CBDCs, or central bank digital currencies, where we are seeing major headway in countries both poor and wealthy alike as they look to adopt blockchain technology for their own use. While this comes with some worries for those of us interested in cryptocurrency remaining a decentralized marketplace, it is also a clear indication of the growing strength and reach of the world-changing technologies that back up Bitcoin, Ethereum, and many of the altcoins. A third important factor is the growing use of cryptocurrency in everyday transactions. As more and more businesses and merchants begin to accept cryptocurrency as a form of payment, it's becoming increasingly convenient and practical for people to use and hold cryptocurrency. Companies from PayPal to Cash App to Twitter have embraced the move, and in the coming decade, there are certain to be many more following the lead of these industry titans. But despite these positive indicators, there are still many unknowns and risks. It's important to remember that cryptocurrency remains a highly speculative market, and even if this is the beginning of the bull, there can still be fluctuations and corrections. So in conclusion, while there are certainly signs that a bull market could be on the horizon, it is important to exercise caution and not to blindly invest in the market. It is crucial to do your own research, have a well-diversified portfolio, and to only invest what you can afford to lose. So considering the factors discussed in the video today, do you think it's a trap, or are we looking at the next major push to new all-time highs? Leave a comment below with your thoughts, and be sure if you enjoyed this content and want to stay up to date on your crypto knowledge, to like, subscribe, and hit that bell icon so you are made aware when more educational content is available. Thanks, and stay safe out there in these turbulent markets.